Fearless Disease.
What this all means for stocks. Let's bring in Jeremy Siegel, Wisdom Tree Chief Economist and Wharton School Professor of Finance. Jeremy, great to see you. Happy holidays.
Thank you.
Labor market still doesn't give you too many things to worry about in claims, although yesterday people were looking at conference board job differential and what that might mean for, I don't know, the prospect of a jobless expansion, let's say.
Yeah.
Before we go and start, FearlessDisease fam, today we expose the truth they hate to hear. Like right now, if you are ready. I know he's going to jump into the companies right now, what's going on with NASDAQ, the AI and everything. But what I really believe is AI companies are really borrowing a lot of billions. They have to. Everybody's going to a spot where they have to be able to be more innovative and they have to create more money. So if you want to make money, you got to borrow money or you got to be able to invest more money. So I believe AI companies are definitely borrowing billions to go put back into this market right now. The debt investors, they grow very wary of this, and financials are kind of like financial companies. They may not be scared of things, but they may be a threat to certain people. But I'm going to let them explain a little bit and elaborate on what I'm talking about. So let's hear what they got to say on the squad on the screen today.
The sweet spot for jobless claims, is between 200,000 and 240. We have just been there virtually every week, which is really, shows, not an overheating labor market to say the least, but one that is certainly not deteriorating and, setting us up for potentially good 2026.
Do you think a more dovish rate environment can unwind some of the job loss that might come from technology?
Yeah. I mean, I think we should be in the low threes on the Fed funds rate. I mean, we really had a good inflation report, and I don't think it's as distorted as a lot of people had feared. The housing component is going to actually contribute a downward pressure for, I think, many, many months on the service part of the CPI over the next year, and that's going to keep it in line. Once the Trump bump of those tariffs, which I think we're mostly through, maybe a little bit more in the next month or so goes through, I think we would be on the low twos on the CPI, enough for the Fed to get the rate down further.
Definitely going to go on a low two. CPI is definitely going to get there, but it's going to take a little bit more time. And you see the Dow is already at 48,556. That's easily up 0.24%. You see on the screen. But what we're also saying is S&P 500 is coming off its 38th record close of the year, man, which is awesome, man. S&P 500 is it's looking beautiful. If you guys are putting a lot of money into that for your savings, or AKA your second 401k, man, invest in it. S&P 500 is looking absolutely beautiful. It's one of those stock markets, and it's one of those investments that you can put in. It's going to guarantee at least 2 to 5% every single year. It's going to do that every single year, sometimes even more. So I would definitely stay on that.
Fed policy, though, Professor Siegel, isn't in a vacuum, and you also have the backdrop of a fiscal stimulus in the form of changes to tax policy, which could benefit individuals in the form of bigger refunds, lower tax rates, as well as corporations. So how do you balance the two in terms of, on the one side, you have things that could actually spur growth, spur some inflation, and on the other side, you've got also the Fed that could lower rates?
Yeah, and as Carl mentioned at the top, we still have two little bumps we have to go through before those tailwinds you just mentioned take place. I mean, we do have a Supreme Court ruling likely in a few weeks about the legality of the tariff. Now, my recommendation is basically what the Supreme Court should do is say to Trump, hey, you need approval of Congress. We're going to give you 6 months to get it, rather than just saying it's illegal, give refunds. I think that would be real disruptive. So we're going to have to see how that proceeds. And then, hey, let's not forget, there may be another government shutdown on January 30th, something nobody wants, but and few are talking about now. If we get through those two bumps, those tailwinds that you talked about are certainly, operative over the next year.
Yeah, it's really, I think the picture right now of push and pull for Q1, Q2, you mentioned the tax refunds, maybe checks from Congress, we'll see, certainly gas prices, all positive. And then on the negative, if they start seizing student loan payments or electricity keeps running double CPI or ACA subsidies expire. I mean, that's a real balance of risks and tailwinds, isn't it?
Yeah, it is. I mean, the ACA, the subsidies are.
Of course, before he keeps on going, he said a few things in there. We think that it's in the whispers of it's gossip right now that we may have another shutdown in January. It may not. It's going to keep on happening because of inflation. It's going to keep on happening because of Fed cuts and jobs. It's going to be always argument with that, but I don't know if it'll be another shutdown. If it does, then we will have to see that when that day comes. Also, what they always talks about as far as gas prices are, of course, down. Groceries are going down. I mean, inflation is going down. Trump is doing an awesome job right now when it comes to the market, and that's all due to the tariffs that they implemented almost a year ago, but it's awesome.
Going to be the big battle. I mean, the Dems have certainly put their hat on that as being the somewhat of what they're going to campaign on for the midterm election. So, I think we have to look at what's going to happen in 4 weeks there, and what the Republicans are going to do. That is, healthcare costs, electricity costs are the drags. Certainly, gasoline costs are certainly a positive. The refunds are definitely a positive. And the fact that, rental prices and home prices have stopped going up. They're still expensive and, certainly out of reach of quite a few Americans. But at least we don't have that, double-digit inflation that we had in the early 2020s.
Exactly how you ended. In the early 2020s, we had that horrible, I mean, did I say it again? Horrible double-digit inflation, but now it's down to single digits with Trump under it. That's something that's not being pushed 100% on the other side, the mainstream, about how wonderful Trump is doing right now. You see a little faded right there. Micron is still up 3.96%, which is a beautiful, beautiful stock that you just get into when it comes to AI. I've already implemented within my household. I think that's something that you should be able to jump in. Now, my prediction so far, like I said, this is not financial advice, but it's just my prediction so far. Crash if AI is going to flop. I don't think it's going to flop, but it's either going to do really, really well, stay moderate, but I don't think it's going to crash. But it all depends on if they're going to be borrowing too much. I'm talking about the heavy hitters. They're borrowing too much and they're not able to bring back the money into the market. It all depends. As far as us as the smaller guy, I would say put your money into Micron. AI is not going anywhere. It's going to be here forever. If that makes sense, go ahead and smash that like. Tap the next video here on the screen. Subscribe, hit that bell. CashApp FearlessDisease is always in the description if you are supporting the movement. See you on the next one. Please stay rich and stay fearless.